G'day everyone, welcome back to Pete's Investing. Today is June 29, 2023. This is the high grade copper price analysis. On our weekly and daily we're in a short positioning, so only trade shorts on the hourly when the weekly and daily are aligned. However, we've got a bullish divergence, and I'll cover that in a minute. First off, on the weekly we talk about the triple moving average of the price, the moving average of the CCI 150 and the oscillator we've got here, which is turning down, and this is a multiple moving average oscillator. So that's all showing a bearish signal. So predominantly short trades when the weekly and daily are aligned. You can see there the daily is also short, so predominantly short trades. We did bounce off this key resistance at 39,650, and it's making further declines since then over the last few days, and it's currently hit this key, well, this minor support area forming at the moment. And I'll talk about that on the hourly. But you can see there all those indicators are turning down in a bearish momentum primarily. So on the hourly, you can see there this minor support forming at 37,188. That's that dotted line. And if this starts bouncing and confirming in the coming days or day, I will confirm that as a hard support area. So I'll move that dark blue line to that dotted line. As well, just as a bit of history, we do monitor these divergences which are in isolation to the weekly and daily trend. In other words, they're not related to the trends. These play out in isolation. So back here we had a bullish divergence versus a bearish on the price. The price broke up and hit our target area in that rectangle. And then more recently we had a bearish divergence here which broke down. The price broke down below our channel. That would have been your entry point, and that was our target area, and it hit that target quite nicely. That happened before our last video. And currently we're in this bullish divergence as well. So this is just started as well, so it hasn't actually entered the trade yet. And the way you execute this trade, let me just draw some, you would draw a channel between that lower range and bring it up to the highest candle within that range. So your entry point will be somewhere above that channel. That would be your entry point. And your target area will be drawn, let me do that again, somewhere within that Fibonacci range. So if your entry is somewhere there, then your target area will be, I usually pick the closest Fibonacci range, so about there up to about that point. So that's the closest Fibonacci range. So that's the first Fibonacci range there is at 38% at 38,127. And the secondary level is at 50%, which is at 38,417. I prefer to take the closest, so that will be my initial target. So the higher the target you put in, the lower the probability of success. And these usually play out, 80-90% of the time. So that's a good strategy in my opinion. But again, you must wait for this to break out of this channel. If you start entering here, it may turn down suddenly, in which case the entry would have been invalid. So always follow the rules, because for this to fail, we need to see the CCI break below this recent low. We need to see that collapse, but we also need to see the price collapse, in which case you would not have entered and it would have been no trade entered. So again, by the time this breaks this channel, the CCI should continued upward momentum, and in which case you would have entered and set a target range as well. The secondary or the primary strategy we use is the trend following strategy, and that's, as I said, when the weekly and the daily are aligned. In this case they're both short. You would take the short strategy. What I've got up here is the back test of the short strategy and a back test of the long strategy. You'll notice we don't use stop losses, we average down. So you can see here currently we're in a short positioning, so you would have predominantly taken short positions. More recently, in the last few days, you would have started taking short positions, and you only take those short positions when the hourly is also in a short momentum. So at the moment it's long, so you don't go short at the moment. Wait for this to turn down to a bearish momentum before taking short positions. So to understand how to trade this and other trading strategies, subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.